All right, good afternoon, everyone. I will begin, as any good host, really, by assaulting my audience with some numbers. The WEF has done all the hard work by crunching the numbers, and here they are. To generate $1,000 of GDP, a country today must consume 460 kilograms of materials, 111 kilograms of energy. So simply stated, $1,000 of growth costs 416 kilos of materials and 111 kilos of energy. Under these circumstances, what we're asking ourselves today is how can carbon emission targets be achieved without compromising the global economy? Now, in this session, we'll debate relationship between economic growth and decarbonization. We aim to solve the green growth equation. Here to help us, some differing perspectives. Jennifer Morgan, Executive Director, Greenpeace International. Andrew Liveris, Member of the Board at Saudi Aramco. Mark Carney, Governor of the Bank of England, and Mariana Mazzucato, Professor of Economics of Innovation and Public Value at University College London. So thank you all for joining us. Jennifer Morgan, let me kick off with you. To achieve decarbonization, what is the green nirvana? What would we actually have to give up in order to make it more sustainable?
I have to say, I think that might be a false question, if I may, because I think that it's more that if we don't shift away from our existing economy that's based on fossil fuels, what we will be facing. So the impacts that we are seeing happening already around the world are massive, and the costs of those are massive, even for a country that is as wealthy as Australia. So I think the question really is more, what's holding us back in moving into that economy? Because it's there, it's been there for a long time, that's there for the grasp.
But what would we implement now? Would we only be allowed to travel by train? Would we eat less meat? What are the top three things that you see the world doing to become better?
So I think the first thing that would happen is that the private banks should stop investing in fossil fuels. They have been investing trillions in fossil fuels and move into investments in low carbon, zero carbon infrastructure and renewable energy. And you would put in place laws that would do that. You would be powering the world with 100% renewable energy, and you would be putting in place the incentives and the infrastructure to do that, so people could get around by high-speed rail powered by renewable energy. You would eat less and better meat and dairy, and we would have a common agriculture policy, for example, in the European Union that would move away from industrial agriculture and support ecological agriculture. So in every sector, there's really something that's there that needs to happen. And I think on the whole, we'll have cleaner cities and better air and healthier people, because the pathway is actually quite a beneficial one for people.
Andrew Liveris, could we do without fossil fuel?
I believe the answer to that is yes, and I not just don't speak with a Saudi Aramco hat there, I speak with my former hat as a major industrialist running one of the largest industrial companies in the world. The notion of growth that isn't sustainable doesn't work. Sustainable growth, I hate the word sustainable in front of growth, because if growth isn't sustainable, we shouldn't be in business. So the ecosystem that we're living in, called this planet, is strained to the limit. We have only one planet, last time we checked, that we can live on. So we've got to do something about the humanity that we've inhabited the planet with. And fossil fuels, the fuel of the 20th century, its days are numbered, are not over, but they're transitioning to be over, to answer that question. How do we get there is a range of different things that have to be done. The criticality that I'm sure the governor's going to talk about, which is finance and how finance speaks, is a biggie. Regulation and legislation around the world, Paris, the climate change accords, and really putting oomph behind that. And then innovation, which I know everyone's going to speak about here on this panel, but while I've got the floor, is really key. The swath of available technologies to humanity today, the ability to put policies in place, from efficiency to alternatives to carbon, hydrogen economy, all the things we can do to actually transition away from coal and oil, ultimately to electrification and really, truly natural gas plays a role, is all available to us today. What lacks is alignment and will and purpose for all of the various groups to get together to make that happen. And in my new life, I'm putting a lot of time into that, actually.
But how can the strategy of big oil actually be compatible with the net zero world?
Well, look, the term big oil is almost a Neanderthal term. I think we've got to realize these companies are energy companies. Energy companies like Aramco have realized that this is a time and a place that humanity's speaking, communities are speaking, audiences around the world, including hopefully more shareholders, are basically voting with their feet, and basically we're going to have to respond to that. Saudi Aramco is a newly formed public company, and there is a KPI. The UN SDGs are pretty key to this. Let's put the KPIs in place, and let's help big oil become truly energy companies and let them manage their own transitions. They can afford it, and they should be able to afford it. We should work together to make it so it's not punitive to the immediate world. You know, we can't get there overnight. So there are ways to get there. Yeah. Jennifer talked about them, and we can.
Governor Carney, you're leading the crusade to wake up investors, right, to climate-related risks. Are they listening?
I think they are, and it's certainly not listening to me, but they're listening to the realities that we're touching on. So these issues have moved very swiftly from being corporate social responsibility issues or more niche issues within finance to fundamental value drivers. I think we're seeing a fundamental reshaping of the financial system. I'm quoting someone else in using that term, but and there was a lot of publicity for a large asset manager last week, but that $7 trillion joined another $110 trillion of balance sheet that's looking for climate disclosure, and not just climate static disclosure, but disclosure around transition. So let me make a core point, pass back, which is what we're talking about is a transition from where we are today to where we need to get to. And the question is, we need to speak a common language about units and time frame. But let me give you one variant of this. Paris stretch goal, 1.5 degrees, 66% probability. We have 8.5 years, thereabouts, rounded up to 8.5 years on current emissions trajectories. Okay, what does that mean for the fuel mix that's going to be produced? What technologies are profitable? Who are the winners? Who are the losers in that? What's their horizon? There are other ways to do these calculations, but what you need is common information, common understanding, and then a market in it. And what is happening is that with the major investors, this is becoming the question. What's your plan to get to net zero of every corporate? Yeah. It's a question, what's Aramco's view on net zero? What is your old company, Dow's Chemicals, plan to get to net zero? Oh, Microsoft has just done this to get to net negative. What are people's plans? And that will determine where capital is flowing, obviously influenced by public opinion, pressure, and government policy as well. But that moving from, if I may, from the periphery to absolutely the mainstream is what's going to drive transition. And I might add growth and jobs.
Why don't we have a harmonization of definitions? We're 2020.
Yep, we're 2020. Look, the first real comprehensive definitions came out 4 years ago. 4 years ago. Actually, the mandate to do it came out 4 years ago. The actual definitions came out 2.5 years ago. They're being refined this year. Just came from a meeting with the IBC. They're looking to reduce them down. And we expect by COP26 in Glasgow this November that we will have the refined definitions of this climate disclosure. And the leading jurisdictions, we want to make those disclosures mandatory. But the core thing we want to get as part of the dialogue, and you're helping with it, and everyone around this table and watching can help with it, is to make sure that the core question for any business or any financial provider is, what's your plan for the transition? Where are you on that path? What are you doing about it? And have that sophisticated conversation, because that's what, alongside climate policy and government initiatives, are going to drive a just transition.
Maria Mazzucato, first, how long does this transition actually take place, and what mechanisms should we put in place to tilt the market towards more green energy policies?
Well, there's lots of talk right now, and people are talking about an urgency to this, right? So there's the Business Roundtable saying we absolutely must change how we do business. And I think what the opportunity is right now about this purposeful company kind of talk is, what would it look like if you bring that purpose to the center of this discussion? And if you bring government to the picture, given that markets aren't just kind of out there putting pressure on company, markets are in fact outcomes of how public, private, increasingly third sector institutions are governed and how they relate one to another. Currently, we have 3 times more government subsidies going to fossil fuels than to climate solutions. But also how we do government, whether it's procurement, industrial strategy, grants and loans, does not have this at its core. The procurement budget, just for the country where I live in the UK, is 3 times larger than the innovation budget. What if we procure differently? What if we do the loans of a public bank in such a way that they're conditional on the transformation of sectors? In Germany, we were just talking, the steel sector has lowered its material content, so its carbon emissions, not because it just woke up and said, I want to be purposeful. It had to in order to get the loan from the KfW's public bank. And this call for bailouts from steel in the US, steel in Italy right now is asking to be bailed out. They should be, strongly conditional on transformation of those sectors towards these targets. And this is about innovation. You don't just, reduce your material. You do it through innovation and investment, and that's a long-run driver of growth and innovation and productivity.
Try and make a quick point here. One of the things, the more we're actually talking about transition, the more we'll see what's easy and what's hard. What's hard exposes where the opportunities are for innovation. So one of the things that is, the electricity transformation is relatively easy given the existing technologies that are out there. The thing that's hard about it is the existing stock and the transition to that. But what is harder is around things like the extent to which there's going to be carbon capture and storage and the technologies around that. Shining a light on that, battery technology, which has made a lot of progress, it needs a bit more of a push. Those areas where you get the focus on what's crucial for the transition, that's when money starts to flow in a way that will really make a difference, both public money for primary research and private money with the right signal, but it's got to be framed in the right way.
Yeah, so I just want to add, I laud the urgency coming out of the financial world. The regulatory world has been slow and governments have been slow, even though we've got Paris. But I think this whole point you just made, Mark, is really key. And I do think leading corporations have already responded, but there are a lot of laggards. And so what needs to happen is we need to get very serious on the financial side on these KPIs. And we also need to understand that there is a transition available right now. I'll take my home country of Australia with the tipping point of the bushfires. That is a tipping point. That conversation is no longer the economic harm done to Australia, okay, by those ravages that have occurred. Whether you could attribute it to climate change or not, it does happen, and it's happening with more frequency. So now, Australia is a big coal exporter, and Australia is a big user of coal-fired power plants. There's natural gas available right away. A 10-year economic transition or 8.5-year economic transition would lower emissions by over 40%. We can do that now. What stops that is the lack of courage by policymakers, okay? And in fact, many of these companies not responding, to get us out of coal and put us into natural gas. Actually, natural gas should not be the stopping point, okay?
But is it more expensive? And actually, do you need nuclear?
Well, nuclear, of course, is the ultimate answer, and a lot of people working on safe nuclear and how we actually put that in place. I'm a fan of nuclear. I know maybe others aren't. I do think we have to put nuclear into the mix, but let's make that a conversation that says to the zero carbon discussion. If I want zero carbon, if I want minus 1.5, if I want to get to this, zero emissions world, I've got to figure a way to get the safe technologies out there now. I think the safe bet, low-hanging fruit, is natural gas-fired power until we get to safe nuclear and until we get to things like hydrogen and safe batteries and affordable batteries.
Jennifer Moore.
So I actually want to come in on, I think nuclear, it's fairly obvious that the risks are very high. And so building new nuclear right now, but I want to come in on the gas issue because I hear a lot of gas being the bridge into, and I think that we don't actually want to invest in an infrastructure for gas when we know that that won't get us all the way where we need to go.
I agree with
and
that.
that we should be investing in the renewable infrastructure,
I agree with
right?
the part that it won't get us to where we need to go. I don't agree with the part that it can't be a bridge. But anyway, keep going.
I just think, well, that's a start. Because I think if you were to take the funds, if you're looking at government funds and where they're going, and be putting them in the place of accelerating the pace of the innovation, if you look at the DARPA program in the US, actually, that is still going on, of actually moving those things forward. If you don't want to take your eye, you need to put your eye on that ball completely. And if you keep it in the fossil side of things, you could be creating a whole nother stranded asset in the mix. Yeah. So why not kind of
We have two eyes.
Go.
We can actually keep an eye on both. And so I think there's a power of the and, the Jim Collins story here. You can't, there's no or in this discussion, as long as we agree on the goal. okay, which is zero emissions. As long as we say we've got to solve this on a line, I think you've got a lot of ands you can use. But I agree with you. It's not one instead of the other to help us get to a low-carbon world. I think you've got to say it's a transition. I like the word transition with metrics.
But it's also a portfolio,
metrics.
right? I mean, it's not about choosing solar, wind, or
Is there a danger?
solution, but if you have a portfolio, that also means risking along the way. So the
Yes.
ability of governments also to welcome that risk-taking along the way. Currently, for necessarily an appetite for that, but also the demand side policies. I mean, if you look
Yes.
100 years ago, mass production, which was a mass, kind of innovation at the time, changing
Yes.
production, distribution, would not have had the effect it did without the demand pull from suburbanization.
I agree
So in many ways, these green policies that are not necessarily out there systemically could even be a pull for how the IT revolution, the previous tech revolution, gets fully deployed and diffused across the economy, because it still hasn't compared to the speed of, say, electricity.
Jennifer, do you worry that putting some of these policies in place will be hard, and therefore governments will back away from it?
I don't think I think the policies are quite clear. I think that we know we have the reporting standards we know what to do on renewable energy. We've researched it. We know long, loud, clear signals are the key. So I think the seemingly hard part, which doesn't need to be as hard as it seems, is for government leaders to actually sit down and put this all together with the experts around the world and listen to the public, as well as smart innovators, to put it in place. And I don't feel the courage right now in a lot of those CEOs or in a lot of those leaders, but it's there. And I think the other factor to bring in here is I think we're in the midst of like the largest civil society and public movements that we haven't seen this since like the Vietnam War or before the Iraq War. That's not going to start. That's not going to stop. So it's just getting started, actually, and you'll hear youth talk about that. So I don't think it's, policy-wise, I don't think it's hard. You can get a big part of what we need with existing technologies. It's actually the politics that is holding us back on this. And that's what I think, that's why that need to really bring in the public, the expertise. I think oftentimes that's not enough in the room of the scientific community that really knows how to move forward.
But also new policy instruments. I mean, in Europe, for example, there's a new instrument around missions. And the idea is that you have a 100 billion Horizon program around innovation, and now part of it will, in fact, be focused on moonshots. And these aren't kind of random pet projects that a minister decides.
Right.
These are, the big question is bringing citizens to the fore to even kind of think about what does a green city look like. But that becomes the condition through which you then access the funding. So instead of picking winners, this idea of what are we investing in, you pick the willing. But to even have access to any of these funds, you need to be willing to experiment towards a solution. But that required a new policy instrument.
But transitions are difficult sometimes, right?
Yes, they can be difficult. They're easier. Look, any journey, any transition is easier if you know where you're going, and so the clarity of the objective, clarity and credibility about the direction of government policy and the consistency of that commitment, even if it's starting relatively small, low carbon tax, but with a credible trajectory to where it's going, or a sustained R&D effort, or highlights around certain skills that work in certain areas. All of those things signal to individuals, to companies, to investors, where to put their money, where the opportunity is. And then what the market will do is it will pull forward adjustment. It will act more rapidly than actually policy will help fill in. And without question, public attitudes and pressure and other things also help shape those decisions as well. And I think that's part of what we're seeing in terms of the response. Because the response, again, in finance, if you look at what's happening in finance, you have the core of the financial system, all the investors wanting information about what? About the transition. Now, different investors are going to have a slightly different view, or a different view on how fast it's going, where to put their bets. That's fine. You have the Bank of England and a number of other central banks will do this as well, stress testing their banks for a transition to net zero. Okay, so the world's largest, most complex financial system, that's what we're doing. So at the core of the system, now these questions are being asked, and are you on the right side or the wrong side of that transition? And if you're on the wrong side, what are you going to do about it?
Why are investors suddenly realizing this is an issue? Is it the protests in the street? Or is it something else?
Well, I think it's a combination of things. I mean, the biggest investors, biggest asset owners are going to be around 30 years from now, and so they can see the implications, likely implications for their assets. The people at the front line were in the insurance and reinsurance industry, where they're dealing with the pricing costs of this every day. But then as well, people are responding to their clients, and actually, they're not disembodied. These institutions, they're made up of individuals, and they can see the imperative. And in the end, what is the market system? What's it there for? It's to solve problems, right? It's to find solutions. It's becoming pretty clear that this is, if it's not the biggest problem, it is in the top 3, and therefore that's where the market will go.
So not to pour a cold shower on that point, but your new role, and what you bring to the table is really key, because I was CEO for 15 years almost. I had 60 quarterly earnings calls with my investors, and I never got asked once.
Exactly.
Once.
And when did you stop being a CEO?
Last year or so ago.
Exactly.
Not once did I get asked by a financial owner about my KPIs on my SDGs or on my climate change trajectory, even though we'd made great progress. So I do think we need to take advantage of this tipping point that I totally agree with, that we've arrived at. Society speaking and speaking loudly, the next generation speaking and speaking loudly. We have the UN goals. We need to incorporate them in through the financial system. The other vacuum is political, which I'd love to hear more about from Mariana and others, which is we have this notion that we're going to lose jobs in this transition. There is evidence now that is showing that no, we're going to actually gain jobs. Right. We need to be very clear then on the transition for the worker, because the worker is the one very afraid and voting, in certain countries, not the US being one of them, about I'm going to lose my job and I'm afraid. So we've got to do a lot about that. What is that transition for that worker? How do we put that in place? Where are the policies around that? I know corporations are doing some work on this, but they're fragmented. You can't do it from the corporate sector alone. You can do a lot, but not what governments can do. So I think those two areas need to be addressed.
Can I just come back, though, in terms of the degree of shareholder activism on these issues? So yes, until the last couple of years, but if you look at major systemic banks, you'll get 2/3 of the questions at their AGMs around these issues. Tripling of proxy actions that have happened over time. It is shifting very rapidly. And the question that people are effectively asking is, it's not divest overnight. I mean, some are, but it's what's your plan? And you see it. I mean, we're just in a room with a bunch of CEOs where they're all clocked. Okay, and a lot of them have the plan, but I think everybody in that room knows they need a plan.
I agree with
Andrew,
that.
can I ask you a question, then it's Jennifer and Mariana? You talk about the tipping point. If we are to see a recession in the next 12 months, will that goodwill go away?
Yeah, well, so maybe I'm a perennial optimist on what's going on with this world, but we have a technology revolution that's creating a new economic growth that we actually, if you look at these trillion-dollar market cap companies that are appearing, we're becoming richer. The world's becoming richer. Are we distributing it perfectly? No. Are we actually finding a way to actually put the right policies in place for this century? No. And frankly, this is where government incentives are not working very well. Now, the leading corporations are doing a great job of job creation in their supply chains, but you're right. I mean, if it scales back, so I'm saying there won't be a recession. Maybe I'm wrong. Maybe the governor has some views on that. But
I'm not planning.
I don't think. Well, we had 08, 09, and we all got scared, and we all got way different in our forecasting. But look, I think technology-driven growth of the type we're seeing will keep our world at the 2 to 3% level for a while. I think we have some time to get this right. My personal view, not a lot of time for this transition, but you're right. Corporations will march to a different tune if they suddenly start losing money. Now, that's where your point comes in, Mark, and I think it's important that they get the KPIs right.
Yeah, and the KPIs, and maybe just a couple points on the transition. I mean, I think, yes, a plan, but it needs to be earlier than, the 2050 piece, but it needs to be a plan for the next few years.
Yes.
It needs to have milestones.
Yeah, you need to have,
right?
I agree.
And I mean, this net zero by 2050 thing is not actually, it's far from adequate. We need it to be much earlier. I mean, the net zero, but then also we need to see the commitments of the companies and the governments before then. And that's one thing. On the transition, I also wanted to raise the just transition.
Yes.
And I wanted to link into the inequality that we have in our world today, because as we know, not everyone is getting rich or richer.
Correct.
So first is to make sure that there is a just transition for the workers that have given great wealth to our societies,
Yes.
right? And to make sure that that is built in to any agreement and transition plan. But the other thing that I think gets less attention than it has, and I'm starting to call it socially just climate policy because I can't think of a shorter name, is the fact that you see if climate policy isn't put in place with in mind with the people who are trying to make ends meet, the cost that will go on to those people, right, is deeply unfair. It is avoidable. Right. It is avoidable. And it causes polarization in our societies, and that's the risk, I think, in the transition if people aren't smart. Those, Australia did this, right? Half of the population in another government didn't pay taxes anymore, right? So I just think that is a key part that we need to take care of people, and that's linked to social inequality today, and it can be done, but I think it's often overlooked.
Yeah.
Mariana, then Governor.
Feeds into what I wanted to say, which is that there's this underlying assumption, unless we make it clear, that this is all win-win. This is all good, innovate, invest, transform, transition. And actually, along the way, we have to make certain types of activities less profitable, including, we can talk about the problems with shareholder maximization and the need for stakeholder maximization, but the amount of, for example, share buybacks just in the last 10 years has exceeded $4 trillion in, globally. That currently is bringing profits to, parts of the system. And profits currently are at record high. So the profit share of GDP is at a record high. Investment globally has actually been falling. And this is fundamentally an effect of the lack of reinvestment back into the system. So you talked about market cap. That's not about investment. That's just about rewards going to particular, just 1%.
Yeah.
And this is important to realize that, this isn't, again, about just saying, oh, let's do it differently. There have to be strong conditions attached. And I always go back to the IT revolution because I do think there's some really interesting lessons. One of the most innovative companies, actually, in that period was Bell Labs, a very innovative company, R&D laboratory that came out of AT&T. That came from government forcing AT&T to reinvest its profits back in the real economy, back in innovation and big innovation beyond telecoms in order to maintain its monopoly. So looking at the monopolies, including the kind of Aramco's in terms of market share and subsidies, there should be strong conditionalities in place in order even just to maintain their existing status quo. But that does mean change, and that change in the short term will mean profitability going down in certain sectors unless they change.
Of course, that's what winners and losers mean. It means not just profitability going down, it means companies going out of business and sectors becoming sunset industries. But I'll make a couple more points, if I may. First, on the regressivity point, absolutely right to be careful on climate policy on that. I think we'd all agree that climate change itself is regressive. It hurts the most vulnerable the most, both within a country and globally, and we're seeing that with increasing frequency. And so secondly, when you put in place climate policy, particularly if it's a price on carbon, thinking about how you recycle that price in carbon and whether that's progressive or not is hugely important. And obviously, there is, there are winners and losers, and there needs to be restructuring. That's always the case, as you know, in the economy. This just happens. This is the new big vector of that. Last point I'll make, if I may, which just around technology. If you think about the applications now on technology, just a couple examples in the overall transition. You think about precision agriculture and using computing power and Microsoft and others there. You think about grid optimization through artificial intelligence. Again, I'll come back on carbon sequestration and the opportunities in agriculture carbon sequestration, not injection, but and these are huge opportunities. There is no one answer, but it is a way that technology spreads out and helps address this challenge.
Can I go back on Mariana's point about share buyback and dividends, and the governor is going to look at me and grimace a little bit here, but I would say the last 20 years of monetary policy has created lots of new financial instruments where public companies have had to be responsive to short-term profits. And so, unfortunately, many of us who ran public companies, I ran a public company, the quarterly march through earnings created this need to actually buy back shares, increase dividend yield to attract new money. Activist investors became part of our life, hedge funds became part of our life, and the long-term investor disappeared on us. Okay, and actually, strangely enough, in the 80s, I would have said the long-term investors were around in big swaths, and private equity came along, and they were short-term. Today, I consider private equity long-term. Private equity, private capital has become much more long-term than the public markets. And this is the excess of monetary policy. We've got a swath of money out there trying to find returns, pension funds, you name it. So actually, it's a lack of fiscal policy, the lack of courage in fiscal policy that doesn't build infrastructure, doesn't build education, doesn't build systems for the 21st century. The lack of courage in the political sector has created this monetary situation, which has to be remedied, and I'm glad this is exactly what you were asking for and what we need. We need long-term public sector investors back.
But then you need to redesign the tax system too. I mean,
Well,
capital
you've got
gains.
tons of work in that area.
Yeah, but those same companies, I mean, you're
Yeah.
blaming the politicians and the policies, but there's massive lobbying efforts to reduce, capital gains, for example.
It's a
And we should
vicious
be
circle.
taxing material more than labor. We could redesign the whole tax system, not just about carbon taxes, but literally, corporate income tax, capital gains tax, taxes on labor versus materials, in order to reach the objectives we're talking
So
about.
you may not have liked the BRT statement, but that was a sign that the business community is fed up with this vicious circular economy that we've created, that one begets the other, and that we've got to take a stand on inclusive capitalism and actually multi-stakeholder returns and rewards. There was a massive signal. That was not an easy thing to get. I was part of the executive committee that got us to that point, that we just can't report a return to one sector of the economy. That you've got to think about just transitions. You've got to think about communities. You've got to think about how actually you can help educate politicians to give you the long-term
But
trajectories
is
to
there
enable
an
transitions.
alternative to capitalism? Or how would you reform
I
capitalism?
hate to think of an alternative to capitalism. Maybe some of your terms are used. But democracy and capitalism in its current form is not distributing capital in the right way to the affected communities. That's the answer. So we've got to find a better way of doing it. Inclusive capitalism is a term being used. There's a lady behind me that runs something called FCLT Global, Focus Capital on the Long Term.
Yes.
Sarah, someone behind me here. That's a
Right there,
big,
get the
big
camera.
movement. What Larry Fink's been saying, and the passive, the index funds, and what they need to do. There's a lot of work that needs to be done in this area.
Yeah, but Larry Fink and two of the other largest asset managers have increased since 2015, the Paris agreements, their investments in fossil fuels.
Exactly.
I mean, the degree
I mean,
to which this goes to
one
the
point.
center of the value chain
Yeah.
will determine whether this word inclusive capitalism
I agree.
is just bullshit or not, right? So, I mean, currently, unfortunately, there's lots of talk, but the actual walk continues to be not going in this direction. And literally, the lobbying effort that gets done in order to keep the system
Yep.
to be rewarding short-term capital.
huge.
Why don't we have a financial
But has
transaction
something
tax? It's like
changed,
not
Brian,
rocket
has something
science.
changed because of what some of the big asset managers came out to say that was loudly applauded by actually a significant change in how they view risk and sustainability? Does that not change a lot? And that was 2 weeks ago.
Well, we'll see, but I think what will really cause change is if the way we govern business, the way that finance is steered, the way that policy is used both ambitiously, and it's not just basic research, Mark, which you mentioned several times, many of the innovations you talked about actually even downstream are coming out of ambitious public investments,
Yeah.
like out of ARPA, which you mentioned.
Yeah.
And the way that these organizations relate one to another, less parasitically, we've socialized the risks, privatized the rewards after the financial crisis. We're risking to do the same thing around the green economy. How we're actually going to distribute the value that comes about by having this active public, inclusive capitalism investment is it's not clear right now given how the contracts are set up.
I mean, just maybe a couple points. I mean, because I think, we issued a report today called "It's the Finance Sector Stupid," because I think although this group gets it, I think it's not well known around the world the culpability of the financial sector in causing the climate crisis. And there may be these types of statements that are out there, but since the Paris Agreement was agreed, you had $1.4 trillion from 24 banks that have come here in the last 5 years going into fossil fuel investments, right? So pardon me if I am not very convinced, no matter how hard it was to get that done, which petrifies me a bit because the interests clearly aren't where they need to be right now. But I think getting those the policy frameworks in place that will move this in the central banking system across the disclosure side of things, moving the subsidies, and moving away from a definition where GDP is the thing that defines what growth is, what well-being is. So moving more into something that looks at our health systems, that looks at do we have an ecosystem and a living earth that we can actually all live on? Moving more into that direction, right? You have a New Zealand that's starting to work there. There's been work that's done on that. But to me, that would at least start redefining some of these things and address some of these gaps that are there, and the fact that we are using these resources as if we could use them forever, and we know that we can't. So there's some key parts of this.
Yeah, there's key parts. Can I pick up on that? Okay, we have COP26, November 9th to 19th in Glasgow. You're all invited. And let's channel some of this energy. I mean, there's lots of issues, but let's channel some of this energy, particularly around the finance sector. So what does the finance sector need? What do private financial actors need to do? What do regulators and authorities who govern that, what do they need to do to put in place the information, the risk management, and the return vectors, the way they manage returns, that take climate into account in every single professional financial decision, okay? That's the question. We have a plan to do that. It's open source, come in, feed into it, help shape it. Start with this. Let's start with the system we have today. The meeting is in 10 months. We're not going to fundamentally change the system or the starting place we have today. Let's move that system so that the core of what is being demanded, which we move to a net zero or to a zero world, you can define it as zero world, but a world where we stabilize the climate as rapidly as possible, get behind that agenda or improve that agenda, but within the context of where we're starting from today. And I think actually you do have, jury will be out, we'll see what happens. From where I sit, and all I do is talk to financial institutions, well, 3/4 of my day, there is a fundamental reshaping of the system underway. Underway, not assured, underway. And the question is whether it gets pushed in.
How difficult is it? So the more questions you ask about your company and how it deals with climate change, and how many more questions are there? Is it much more complex than we thought it was?
Once you get everybody talking about the transition, exposing whether company A thinks the transition is over 40 years, company B thinks it's in 10, investor Y wants it in a shorter time period, et cetera.
Yep.
Once you get a common approach to this and dialogue around it, then you have a market, then you know where to put the pressure. Right now, the conversation can be deflected so easily because different people are talking about different priorities with a different language, and that's why we need a common
But the language, sorry.
No, go ahead, Marion.
The language needs to change, right? So we often hear leveling the playing field.
Right.
You're talking about tilting the playing field massively towards a green direction. And currently, if you look sector by sector, there's huge differences in how corporates behave. When we talk about stakeholder capitalism, some currently are governed by stakeholder capitalism. Even in telecoms, Huawei is a cooperative. Ericsson has workers on the board. Cisco has done one of the biggest, buyback schemes in the last 10 years. So there are ways that we can fundamentally tilt the playing field so that we reward long-termism, we reward green transformations in sectors, worker training in order to transit
Can I just make one quick
ways.
point, though, on buybacks and returning capital to shareholders, which is, as part of the transition, what we will want, is that big energy companies are buying back a lot of stock and returning a lot of capital to shareholders because their core activity, those who haven't reinvested in new energy, has to be returned. Because what happens to that? It doesn't just sit with shareholders. They don't just look at it.
But that assumes there's no opportunities.
They reinvested in the but it depends on whether they have the capabilities, because not every big energy company is going to be a winner in the transition because they haven't developed these core competencies. It's the flip side of people not adjusting. Now, some of them might, and we want a system that moves the capital from those who are going to be left behind to those who might be moving ahead.
I want to be responsive to Mariana's challenge. I mean, frustration, talking about it, time is over, and so it's not it's the famous quote, I won't use his name, but it's not what you expect, it's what you inspect. So please, COP26, KPIs. Yeah. KPIs around climate change goals. That will
key performance indicators for those who don't
key performance indicators.
Yeah.
Metrics.
Yep.
Metrics that business will respond to metrics. Hold people accountable for it. Okay. Money goes to those metrics. Okay. You won't get behavior change unless you do that.
Yeah.
Okay. You'll get more of the same. You'll get talk. You'll get conferences like this that don't yield in any outcomes. Okay. Outcomes will come if you change the key performance indicators.
And the perception of
And make
opportunities.
them- I wanna
get Jen-
And the opportunity.
And make them mandatory, because these voluntary
Yeah,
things
exactly.
aren't.
Well,
That's
yeah.
a good place for pressure, by the way.
Yeah.
Is on that.
Exactly,
Yeah.
mandatory, but also
Legislative.
the innovation agenda. Don't write off big oil. Let big oil become energy. Let it become sustainable energy. It can do it. There are some that are actually leading it right now, and I'm including Aramco in that. But you know, the transition word is key, very
How
key.
long, so we're running out of time. Let me
Yeah,
ask you each,
sorry.
how long you think the transition will be first? Is it closer or is it further than we think?
Well, if you're looking at me, my job right now is to make it closer. I think I'm an advocate, I'm an activist, if you want to use that term.
Are we talking
but I'm
decades
informed.
or 5 years?
Oh, look, it's going to take us most of this decade, but if it doesn't take us most of this decade, we're not going to like the answer in 2030. We cannot get to 2030 and have this discussion, okay? And so now.
Mariana?
Now, but I just want to come back to your early, I'll say it really quickly. The first question you asked Jennifer is very problematic. We have to stop asking that question. It's not about growth or
it's not all.
what not to do. Warren Buffett, and he was not a communist, he is not a communist, I promise, he's a capitalist. He always says, stop reducing my tax. I don't even care about that. I invest when I see an opportunity. What we need to do is create opportunities, increase expectations of future growth opportunities in this area.
That was he,
and
I
then
So
quoted.
how do we
transition
measure it?
will
Let's not talk about GDP. How do you
haven't
measure it?
fired.
GDP attached with some kind of sustainability index? How
Measure
are we
at the
measuring?
macro level.
Yeah.
I'm interested in measuring what often gets called the ecosystem, but then any biologist will tell you what kind of ecosystem. Is it mutualistic or parasitic? How can we restructure public and private actors to actually get mutualistic, progressive, not regressive,
Yep.
ecosystems, which is public-private partnerships. That word is no longer fashionable.
Right.
But
But
we're
you're
gonna-
still using GDP as a metric.
No, the structure. We need lawyers. I mean, I don't like lawyers. I don't know if you're in the room. But
Well, you
actually,
got me
we
worried
need
now.
legal innovations in this area. We have incredibly problematic contracts, relationships in the current state of capitalism in different sectors, but given that this is the one that has to change within 10 years, right? Within, otherwise we're screwed massively. We do need to have indicators of how we're working together to get this done. And if we're doing it wrongly, then, you know, the money, for example, coming from governments has to stop in a particular area. That's what I mean by conditionalities. That's what got the steel sector in Germany to be the only innovative in the green sense steel sector almost in the world.
Okay, so how long do you think the transition will be? 5, 10 years, longer?
Well, we don't have a choice. It has to be less than 10, otherwise it's bye.
But it's not what you want, it's what you think. How long do you think it'll take place?
Today, like when I mentioned the procurement budget in the UK for the Ministry of Transport, it's over 30 billion, right? So if you today said, we're going to procure differently, it's not going to just be about costs and kind of minimum, you know, cost, minimum quality just to get a job done. If everything becomes about transitioning in this way, it means tomorrow the way that governments procure changes, the way that businesses get evaluated and basically can survive or not, given that so many subsidies are allowing businesses to survive, would change. We can change that tomorrow. People stopped smoking in Italy, where I'm from, overnight because there was a ban. No, it was. It was almost overnight. I mean,
Almost.
they still park on the zebra crossings in front of schools because there's no fine. People do change.
Yeah.
Governor Carney, how long do you think the transition is?
The honest answer, I don't know how long the transition is, but what I think, I mean, I forgive me, I wouldn't do it's the finance stupid, I would say it's the transition stupid. So forcing everybody to talk about their view of the transition, their plan. We've got a problem, plan beats no plan. That's the one thing I learned in the financial crisis. So we've got a climate crisis, plan beats no plan. What's your plan as a company? What's your plan as a bank? What's your plan as an investor? What's your plan as a government? What's your plan as a media organization around this? What's your plan as an individual? Get it out there, and that's where you start to force the change around it. And look, I'm simple. Finance is what I know. That's how finance will adjust. And now finance, investors, banks, insurers, asset owners are starting to say, what's your plan? And I'm sure on the Aramco IPO, that question was asked.
Over and over.
Yeah.
Well, I think the transition, I think the demands will come for it to happen overnight. It's happening, you heard. I mean, the op-ed that youth signed up to here was focused on the finance sector.
Yeah.
I think that is an incredibly important development that business should be taking into account. It's not only looking at governments, it's also looking at corporates. And it can happen tomorrow. It can happen tomorrow, and the decisions are there. You know, the first study on climate went to Lyndon B. Johnson in 1965.
Yeah.
Right? That shocked me. So it's not that it's not possible. It's not that we don't know. So, you know, it's there. The technology is there, and this decade is the key. But the decade can't be the last 2 years. Glasgow is key. It's not the end. We need to make progress there, and need to actually build the confidence for young people around the world that they are not going to face climate chaos when they're 20 years old.
All right, ladies and gentlemen, thank you so much for a spirited conversation.